having a diversified member base with a wide range of product offerings and strong unit economics. We strongly believe in company's market leadership and are confident of its growth journey going forward. WeWork India has been the largest operator by total revenue in the past 3 fiscals and has been a key contributor for the evolution of flexible workspace products and services. They lease primarily Grade A offices from the prominent developers across major Tier 1 cities and then design, build and operate them as flexible workspaces as per global standards. The IPO shall open on 3rd of October and close on 7th of October, with the anchor tranche opening and closing on 1st of October, that is tomorrow. It is a 100% offer for sale of up to 3,000 crore with the Embassy Group and the WeWork International selling partly. The price band is rupees 615 to 648 with a bid lot size of 23 shares. The IPO would be 75% towards QIB, 15% HNI and 10% retail.
Today, WeWork India is the largest operator in what is the fastest growing flexible workspace market globally. We have the brand that is synonymous with co-working, just like Uber is for ride-hailing, Airbnb is for vacations home. And WeWork India has grown to have a revenue of close to about 2,000 crores as of last year, nearly 1.5 to 2 times that of any of the nearest competition. We operate in the top 8 cities across 1,14,000 desks, across 8 million square foot and 68 centers. We focus on the mid to premium segment of the market. As you would have seen in our video, the space quality that we have is unmatched to anyone else. We are able to offer this to some of the best customers in the world. So we have some of the best startups from India, some of the best Indian businesses, and also the global Fortune 500 companies. By focusing on the mid to premium segment, we've been able to command a pricing of nearly 20,000 rupees a desk, which is nearly 2.5 times that of anyone in the competition. Our revenue to rent ratio, which is 3x, which talks about the utilization we can make from a space. You'll see across metrics, we've grown the business very sustainably. As we continue to add capacity, we've been able to actually continuously move pricing also up. While we move pricing up, we've been able to bring costs down. This is leading to return profiles in the business that is unmatched by anyone else in the industry. We've shown that this business model works and is highly profitable. We've built the business or turned the business from a negative EBITDA business just 3 years back to now a positive 22% EBITDA business. The market opportunity in India is huge. We all know that India is on the way to becoming a $5 trillion economy. This will only happen if lots of entrepreneurship is happening, if Indian businesses grow, and India continues to be a place where global businesses hire talent and continue to take space. Our member mix is diversified heavily. 80% of our mix comes from large-scale enterprises. 25% is Fortune 500 companies. We have almost a 60-40 mix between international and domestic businesses. And if you look at all of the sectors, we have a highly diversified member mix, starting from technology to pharma, to media, to banking, that are big users of our space.
What we are doing is working well. So we just intend to continue doing more of that. This includes us deepening our presence in existing cities and going into further micro markets where there are top-class assets. We intend to broaden our suite of value-added services so we can unlock more wallet share from our customers. We'll continue to focus on the unit economics of the business to make our financials even stronger. Clearly, our data-backed approach to expansion is working. We'll continue doing that. And finally, we also feel that the space is ripe for some bit of consolidation. And so we might grow through inorganic expansion as well. Right? So I'll just leave you with some key takeaways. So we're clearly a category-defining brand and hold high aspirational value. We're the pioneer in the flexible workspace industry in what is the fastest-growing flex space industry in the world market in the world, which is India. We are one of the most extensive range of products and suite of services. Our revenue to rent ratio of 2.7x is clearly above industry average. We have a very high-quality customer base and strong relationship with top developers. Our strong unit economics and financial performance is unparalleled. And finally, we're backed by the Embassy Group, which already is a sponsor of 2 listed entities. Speaking about margins, so here we talk about both our reported margins as well as our adjusted margins. So our reported India's EBITDA margins are 62-63%, which is clearly the highest, right? This is with benchmark as well, that we are the highest in the whole industry during the whole of FY25. Now, on the right side, we have our adjusted EBITDA numbers, which is our India's EBITDA less lease rental cost. We believe this is a more accurate representation of the business's margin itself because you have to take into consideration lease rental cost. Even here, you can see that we moved from about 14% in FY23 to about 22% in FY25. We're clearly industry leaders there. You'll see an aberration. You'll see a dip from about 21.5% to 18%. The reason for that is straightforward. Like you said, we added about 16,000 desks, which is over 1 million square feet in the last 4 months of the previous financial year. This is very much as per the life cycle of a project where it takes about 3 to 4 months for it to ramp up. And like we mentioned in our prospectus, it takes about 4 to 6 months for a center to hit profitability.